Condos have had quite a rough time in the last 3 to 4 years, and many of us are curious and even maybe concerned that what the future holds for condos in Toronto. So we're going to talk about that. And also in the last segment of this video, just for fun's sake, I'm going to ask ChatGPT about the future of condos in Toronto. So stick around till the end to watch those responses. And if you get any value out of this content, please hit the like button. Also, please do subscribe to the channel. It really helps a small channel like this to grow. Now let's talk about it. So first we're going to look back and see how the condos have performed this year, and then we're going to talk what the future looks like for condos. So let's talk about that now. So this data is for benchmark prices for condos in whole of 416 area, that is Toronto proper, that is this area. We're going to talk about condos in Toronto proper, and here in the 416 area, the condos have prices have come down about by $40,000 since the beginning of this year. That is from January of 2025 up till November 30th of this year. Okay, and if I zoom in towards downtown Toronto, that is CO1 area, that is south of Bloor Street to east of Dufferin to west of Yonge Street, in this neighborhood or in this pocket. So the prices have come down by about $25,000 from January of this year up till now. So this is just benchmark prices. In some cases, we've seen prices have come down more. In some cases, we've seen prices have not come down so much. So it really depends from pocket to pocket and also building to building and the type of unit it is. And now we're going to deep dive even more and see what type of condos sold this year. So this is the data for whole 416 area, that is whole of Toronto area. And in Toronto this year, that is up till November of 30th of 2025, there were 11, just shy of 12,000 condos which were sold. And out of those, majority of them, the maximum amount of condos which were sold were 2 bedrooms, which were followed by 1+10s. Those were the second highest, and the third highest category was 1 bedrooms, and in 2+10s were the fourth highest condos which were sold. And if you can see studios, not many studios were sold this year in the city of Toronto, and as well as 3 bedroom also were selling more than the studio apartments. And the reason is, one of the reason, studios are usually bought by investors, and investors are right now not entering the market, or they're not in the market in today's time, primarily because of the numbers are not making sense for them, and they're being extra cautious right now because investor needs two of one things: either cash flow, which we are not getting in today's time even if you put down 20%, or they need appreciation, and that is also we're not seeing. As I just showed you, the prices are coming down, or they've come down, so that's why investors are staying away from the market. And now if I dig in similar data for downtown Toronto, so in downtown Toronto, that is in downtown core, that is CO1 and CO8. In this area, the story is slightly different. Here 1+10s are selling more as opposed to 2 bedroom. So 1+10 sold the maximum in downtown Toronto. Sorry, I forgot to mention there were total amount of sales happened in downtown Toronto up till now, or up till November 30th of this year, is 3,891, just shy of 4,000 condos which have sold this year. And out of those, maximum were 1+10s, followed by 2 bedrooms. Those that's 25% of the condos were sold, and then followed by 1 bedrooms. Again, studios, the story for the studios is more or less the same, and 2+10s are also selling. So the message or the signal we're getting is bigger units are being sold, because bigger units are generally bought by end users because they want a good living experience. So big units are selling, and especially the 1+10s, which are between the size of 600 to 699, has a parking spot and has a good layout. Those condos are the most popular in today's time. That's what we're noticing by working on the ground level. So that was a quick recap for condos for the year of 2025. Now let's talk what's next for condos. So condo market or real estate market is driven by certain factors, and we're going to talk about that now. First is interest rates. Number two is supply and inventory levels. Third is population growth. Fourth is economic factors such as employment numbers, CPI numbers, all those. Fifth is government policies and regulation, which includes first-time home buyer program, or removal of HST or GST from new builds, all those things. Sixth is price, and seventh factor is driven by all these above factors, that is consumer confidence and market sentiment. So first, I'm going to talk about interest rates. I don't think so. Now I think Bank of Canada is more or less done with cutting down of interest rates, and I don't think there's going to be further interest rates cuts. It depends upon how the economy also plays out. And I was going through Scotiabank report, and they're also suggesting the Bank of Canada is done cutting rates. and with the next move expected to be an increase in the policy rate in second half of 2026. This I kind of disagree. I don't know. We'll have to see, but chances are slim. I think so. They might not increase in 2026, but it depends how the economy plays out. So I was going through the report, and it says by the Q3 of 2026 onwards, they might start increasing, but I doubt this will happen. But we'll have to see how the situation pans out. So interest rates, I think right now we're also at a reasonable rate of interest rates, so that's pretty good. But we'll have to see there are other factors which has not helped the real estate market or the condo market overall. So we're going to talk about that now. Supply and inventory dynamics are going to play a huge role too, for especially for condo markets. So here you can see on the screen, the right chart is basically condo completions. Over the years, and in the year of 2025, we saw the highest level of condos being built and being delivered to the market. These are new condos I'm talking about, and this supply, what we enjoyed in the market, is because builders were building aggressively in the year of 2020, in the year of 2020 or 2019 or 2021 or 2022, and now there was high level of supply. But now the tables have turned, and if you see on this chart, the construction levels are decreasing, or the condos which are under construction, they are decreasing at a pretty high rate. And I think this trend line is going to go even further more downwards as time progresses. So chances are by the year of 2027 or 2028 or beyond that, we're going to run into the same problem of supply, especially for condos, because builders are not building in today's time. And why they're not building is because it's not economically viable for them to build. And secondly, pre-construction condos, they sell at a premium as opposed to resale prop condos, and not many buyers are entering the market to buy pre-construction property. So these are the factors why builders are not building. And also, if you see news articles, housing starts in much of southern Ontario down for most of 2025 report, and it says the study said that there were 51% fewer condos apartment starts in the first 3 quarters, along with 43% fewer ground oriented housing starts. Ground oriented, basically freehold properties as detached, semi detached, and freehold townhouses. However, purpose built rentals were up 42% compared with previous 4 years. So purpose built rentals are increasing for sure, but chances are, like, once the purpose built rentals are only for rentals, chances are they're not going to come into the sales supply of things down the line. So I think once we see tightening of supply, then we'll start seeing some kind of a flip in the condo market when it comes to pricing. So now let's talk about a third factor which affects the condo market or a real estate market in general, is going to be population growth. So if you see on this chart, the blue bars are basically net permanent residents, and the orange bar is net non-permanent residents, basically temporary residents, and the gray bars are the natural increase. Okay, so if you see net non-permanent residents, government has taken aggressive actions, and they have reduced the temporary residents. And if you see that, we can see a decline in the net non-permanent residents. So this is just what going to affect the rental side of things, because temporary residents generally enter the rental side of things or rental market, right? And on the flip side, if you see the net permanent residents, that has declined, but it has not declined drastically. So that's basically kind of a continued growth of homeowners, because permanent residents are the one which slowly enter the market in once they land after like 3, 2, 3, 4, 5 years, whatever, then they start entering the market. So that's we still seeing continued growth for those, not as much what we saw in the during COVID times or even slightly before that, but now they have decreased, but still they haven't decreased in a drastic manner. And if we're talking about the rental side of things, I just want to show you one more stat. The Toronto condo leasing activity has been the highest in the year of 2025 in the last, let's say, 12 or 13 years, and that's primarily due to because rental prices have come down, and many people are still sitting on the fence. They're not entering the market. That is, they're not buying condos or houses. So that's why they're continuing to rent. And the existing renters, they're ending their leases and they're moving into better deals because rental prices have also come down because of higher supply of condos. And secondly, back to office work is also driving some rental activity. So coming back to the office has an effect on the rental side of things. I get this question a lot: is that going to drive these prices? For now, in the short term, I don't think so, because first, people rent and then this slowly and steadily start entering the market. So in the near term, I think it's going to affect the rental side of things as opposed to sales side of things. Okay. And also, I want to show you one more fact. In the year of 2022, I'm just going to do a quick rental versus sales volume. In 2022, you can see there were 36,000 rental volumes or rentals which happened. And in the same year, the sales volume was 62,000 because this was one of the high sales year. And then in the year of 2023, there were 38,000 rental volume and the sales were 58,000 transaction which happened for the sales. Now, if I jump right into 2025, the tables have turned. There was the amount of rental volume which we can see is 50,000, 57,000 rental activity, that is transaction for rentals, which happened in the year of 2025. And in the same year, this year, basically up till this is data is from January 1st to 30th September. Just a quick note, sales volume has just reached up to 47,000 number of sales which happened this year. So I think by the end of this year, we will see about 60,000 sales, probably around that number, which is a pretty low number because not many people are buying in today's time. So now let's talk about the fourth factor, that is economic factors. So which includes employment numbers, CPI numbers. So the job market in the city especially is not doing that great. I talk to so many working professionals and they are actually worried about their jobs. And also I also talk to fresh graduates too, and they're also not getting so lucky in getting the job. So it is a tough situation out there. And secondly, the salaries have not kept up with the overall cost in the economy. So that's a major thing. Even the prices have come down overall, but the salaries have not kept up, or the salaries are not increasing. So that's the major problem. So that's why it's not a pretty look over there. Sure, CPI numbers or the inflation has come down, but overall the affordability is factor is still an issue. And also, I would throw a trade deal with the US in this category as well, because that plays a huge role in the economy. So if that gets sorted out, for sure there will be some positive sentiment in the market, and that would help eventually the real estate market too. But right now we've not had much of luck, so we'll see how that pans out. On top of that, there's also this buzzword Kuzma. This is also coming up, and we can see in the news that Trump might blow up the Kuzma deal, or they might renegotiate. If this comes into play, like if they want to renegotiate this deal, then it's going to have a pretty negative impact on the economy and eventually on the real estate market as well. But we'll have to see how this pans out. But we started to see this buzzword in the media, so we'll see how that pans out. Fifth is government policies and regulations. So honestly, the government has not done any major earth-shattering, I would say, policies announcements which has moved the market. So we've not seen any much, so I won't talk much about that. Price, yes, they've come down, but at the same time, still we have that affordability issue because the salaries have not kept, as I said. And seventh, consumer confidence right now is it's not that great, I'll be honest. But we'll see how the sentiment pans out. But overall, there's a pent up demand. There's so many people who are sitting on the fence and or on the sidelines to enter the market, but because of this, there's so many factors. There's so much uncertainty and instability in the market. That's why they are continuing to rent, which is understandable. So now let's talk about what's next for condos, or what's the future for condo market in Toronto. So first, prices will stay flat, I think, for the next year, and we might even see downward pressure for prices for condos which are not the best condos, like the condos which do not have a best layout or the small cookie cutter condos. We might see further downward pressure for those, but the condos which are good, we are not seeing that much of downward pressure, and in some cases we're seeing slightly upward pressure for those, or at least they're holding value. But that is they're selling at the current market value. So that's one thing I wanted to point out. Second, number of sales might rise slightly, but it depends upon the economy, how the overall economy plays out. Because as I said, there are so many people who are sitting on the sidelines, but at the same time we have mortgage renewals also coming, so that might trade off. So we'll have to see how that pans out too, and overall economy, how also that plays out. The buyers have upper hand right now. There are lots of options to choose from, and if you're someone who's looking to buy in today's time, I would buy with a long-term mindset, because over the long run, I think that the condo market as a real estate market is going to eventually going to do well. That's how it has played out historically, including the condo market. As all the factors and the data I showed you, I think in the year of 2030 or 2029, I think the market might flip, but it also depends how the economy plays out. And now, also for a quick fun sake, I'm going to ask ChatGPT, what does ChatGPT thinks for the condo market, or the future of the condo market in Toronto? So let's check that out. So here we are on the chat here, and I'm going to ask chat what's going on. So right now, let me just go on the incognito window so that it's less biased. So let's check that out. Here we are. And if I ask what do you think about Toronto market looks like, I'm just going to put short and the short, and long run. Okay. And let's see. So in the next 2 to 3 years, it says prices and rents will likely stay weak and soften. Okay, that's fair. And plenty of inventory and slow demand. That's fair. Long term slowdown in new condo construction, new free launches may lead to future supply squeeze. Okay, that's what we also spoke about, kind of. And condo may regain attractiveness for first time home buyer or people priced out of houses. That's also a good point, because the gap between houses and condo is also increasing. So when that increases, because houses become expensive, and then people start lean towards condos because houses are unaffordable. That's the reason. So I didn't point that in my slide. So that's a good point here. And overall long-term value of a well-located condo, good neighborhood, transit, reasonable maintenance fees will likely hold up. But easy money that drove the last boom is gone. I agree with that too. So next couple of years, probably we'll see will be buyers or renters market. Okay, I agree with that, with prices, rents at low and or stable plateau. But over the long haul, constrained supply, potential rebound, demand makes condo a reasonable bet for value preservation, especially for those buying for renting with a 5 to 7 years horizon. So kind of on point. I agree with this, but I thought it'll be fun to ask chat what's going on. And yeah, so I hope I was able to give some value. And if I did, then please hit the like button. And if you have any questions about real estate, you can book a call with us by clicking on the first link mentioned in the description below. Thanks, and see you in the next video.